shooting star. Now a shooting star candlestick will look something like this. I will show you on charts as well so that you can understand how it really looks. A shooting star is a green or a red candlestick that looks insignificant. So once you look at the candlestick, the body won't be like calling something up. It will be looking something irrelevant. But a shooting star has a long upper shadow with small or no lower tail. So you will be seeing an extremely high high. This pattern is a bearish pattern in a bull run, because what is a bull run? Let's understand that. In a bull run, everyone is buying and the price is closing every day at a higher price, right? Number one thing. So once we know that everyone is like bullish, everyone is buying, so we are like good to go. But if everyone is buying and suddenly you see such a high point, such a high shadow, then you might consider, okay, everyone was bullish, so how come all the buying was not able to hold that high? Why on earth it fell down? Because everything that happens in the market have a reason. It cannot be like irrelevant or like random. So if the fall comes in, then it's a cause of concern because it was a bull market and the supply was already getting absorbed. So how come there was so much supply that the buyers couldn't buy it out? Because they were all bullish, so like more supply meant they were able to like procure more stocks or more Forex easily, but they were not. If shooting star is formed in a fall, then its meaning changes to continuation pattern. That is, fall will continue. So its meaning is different in two different patterns. That is, if it is a bull run and it happens, then it means a change in trend is about to follow and the bull run might cease. If it is happening in a fall, in a bear run, then it means that the bear run will continue to fall down. It's not like turning up right now. So it's like a continuation pattern in a bear run. Now let's look at shooting star on charts so that you can understand how it really looks and how to trade it. A shooting star. Now a shooting star always occur on an uptrend. If you look at it right here, this is an uptrend. And just look at this one. This opened at 37.10, made an extreme high of 37.99, but then came back down and closed near its open of 37.26. Now, a shooting star could have a black, red, or red candle. That is the body. Now, what I mean to say is, it could be green, that is it's like it's profitable from the open, that is 37.10 and close this 37.26 right here, or it could be red, that is the open is 37.10 and it could close, let's say, at 37.8, so it will be showing a red candle. But that doesn't matter. What matters is, on a bullish uptrend, there is an extreme high, there is an extreme wick, and there is no like significant tail. It's little or nothing tail. That's what is a shooting star. And if it happens to come on the uptrend, then it's a bearish technique, extreme bearish, and it goes like after that it falls off. Now if you look at this candle, this is a perfect example of a trap. This is not a like uptrend, this first candle. So if it happens to come here, never consider it a shooting star, because shooting star always comes in at a bullish trend, not at a bearish like method. If it comes at a bearish method, then it's not a shooting star. So that's like the real significance. It should be in an uptrend, not on a bottom trend. If it comes at a bottom trend, don't confuse it with a shooting star. This is a shooting star and this is not. Thank you.